Bitcoin doesn't usually have like V-shaped recoveries.
No.
Usually when it goes down, it finds a floor and then it goes like sideways on that floor for a long time. Bitcoin is now a 17-year-old asset. So there's a bigger sample of longer term holders, people that have hold 5 years are not even that OG anymore, even 10 years. There's no fundamental reason why the 4-year cycle should be a thing anymore. Obviously that was based on, the new coins used to be a very big percentage.
The OG pool is simply larger than it used to be. Even if the same small percentage of holders decide to sell for lifestyle reasons, their impact is disproportionately larger because their net worth has exploded. This isn't disillusionment, it's simple math. Furthermore, Alden argues that Bitcoin hasn't lost its way. The code is the same as it was 15 years ago. What changed is the fiat system. The creation of ETFs and the entry of corporate treasuries wasn't Bitcoin changing to meet the system. It was the system finally becoming liquid enough to pull Bitcoin into itself. If you're looking for a retail revolution, you're looking in the wrong decade. This is an institutional game now. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Obviously, this was a disappointing cycle that we've had. So it's funny, I didn't expect Bitcoin to hit 100K in 2024, so it kind of did better than I expected. But then in 2025, Bitcoin did worse than I expected. I was hoping to see 150K. We only got to 126. So disappointing cycle, but nothing's different about the thesis itself. There's no fundamental reason why the 4-year cycle should be a thing anymore. Obviously, that was based on, the new coins used to be a very big percentage. So when that new supply would get cut in half, that was a really big deal. Now, new coins from mining are a tiny share of Bitcoin. So them getting cut in half is not a material factor compared to many other factors in the market. But cycles still exist. I mean, there are, bullishness builds momentum to the upside. It builds bearishness builds momentum to the downside. So you still have liquidity cycles. You still have these kind of price cycles that happen, even though I think there's no particular reason to think there's a 4-year cadence anymore. And I would, expect that this would be the bear market would be shorter, because I don't think the halving is a big catalyst for the next bull run. I think basically longer term holders not selling anymore when they kind of exhaust sellers. That's really, I think, the catalyst for the next cycle, not the halving. I think it's actually, and I push back a little bit on this narrative. I think it's it's a kind of a game of statistics, and a couple things I can add to that. So one is, what is an OG? We can define it a couple ways. Now, it is true that every bull cycle, those that have held for a number of years tend to start selling into that strength. It's not because, usually because they're disillusioned with Bitcoin, quite the contrary. It's because they bought years ago, they're up 10x, 20x or more on their position. It went from 2% of the net worth to 90% of the net worth. Many of them have families. They want to increase, they increase their consumption and lifestyle and stuff like that. So you do get that selling pressure every bull cycle from the longer term holders to those newer buyers. That happens every cycle. When you look at, say, for example, the percentage of coins that have held over a year on chain, it's not been a particularly big selling period from that perspective. Right now, there's a record number of coins that haven't moved on chain in 5 years.
Really?
Now, yes.
I actually hadn't seen that metric.
Yeah, and that's true. Now, what is also true though, and this is where kind of statistics gets weird, Bitcoin is now a 17-year-old asset. So there's a bigger sample of longer term holders, people that have hold 5 years are not even that OG anymore, even 10 years. People who bought 10 years ago, they bought 7 years into Bitcoin's, life cycle. So there's way more OGs that can sell. Whereas if you look at a percentage that have sold, it's pretty small. So I actually think that this cycle has not been particularly bad from like an OG selling
I
perspective.
never thought about that at all. It literally just, if there's more OGs, then it's a disproportionate effect because the asset is still relatively small. So even if it's the same 5% that choose to sell, they have more coins, higher net worth, and I guess disproportionately impact the market.
Yeah.
So really interesting. So you don't think that there's a fundamental reason that they're selling in mass at all?
I don't think so, no. I think, anecdotally, you'll have individuals say that, I don't like the fact that Bitcoin got corporatized, whatever that means. So around the margins, you can always find examples of a narrative. But I don't think the numbers, from everything I've seen, all the stuff I've looked into, that it's an overdone narrative that OGs are selling a lot, even though they are just like every cycle. There's no world where it becomes a multi-trillion-dollar asset that's somehow magically only held by retail.
Yeah.
That's just not how markets work. Now, and people often say things like Bitcoin lost its way, it turned to the system, but Bitcoin hasn't changed. It's basically the fiat system, pulled some Bitcoin into it. It made, the regulatory system changed. It got big and liquid enough that it could capture the interest of institutions. Obviously, the ETFs were made, but that's not Bitcoin changing to adapt to, the corporate side. That's the corporate and institutional side pulling Bitcoin into itself. So I think Bitcoin's working the same way that it has, 5 years ago, 10 years ago, 15 years ago. I think primarily the first one, that the bull market itself wasn't very strong, and I think that will affect the at least my base case of the duration of the bear market. And the euphoria that we did see was mostly, every kind of cycle has a particular area of euphoria. This time it was Bitcoin treasury companies. So some of those are trading at, the big ones trading at, 3 to 8 times MNAV. Obviously, some of the smaller ones, you get almost to infinite MNAV because it's like almost, they didn't even buy Bitcoin yet. They're trading at high levels. That's where obviously a lot of the real pain, that's where they get their like 99% drawdown. But I think that, absent something really big blowing up, I think this bear market can be absorbed more quickly than prior ones. Maybe famous last word.
This is the roadmap for Bitcoin. The catalyst for the next cycle isn't a halving or a government endorsement. It is the moment when Bitcoin is forgotten, when it finds a floor, chops sideways for a long time, and exhausts every single seller. The friction of getting capital into Bitcoin is now lower than ever thanks to the ETFs. The bottleneck of access has been solved. Now we are simply waiting for the world to wake up from its AI and silver distractions. When Bitcoin stops going down for no particular reason, the narrative will flip from disappointment to opportunity.
Bitcoin doesn't usually have like V-shaped recoveries.
No.
Usually when it goes down, it finds a floor and then it goes like sideways on that floor for a long time. We were doing that in November for like 2 months. Then we rolled to a new floor. Now we're kind of chopping along this new floor. I don't know if we get a third, waterfall sell-off to another lower, but I do think that'll be a process to get back. I don't, even though I'm not saying, I don't think we'll see a multi-year bear market, but I also don't think we just snap our fingers and go back up to 100K, in a month. It's still, because it's small and volatile, it's still treated like a risk on asset. I think that's going to persist for quite a while. But I don't really expect any one particular correlation. I think the on average the liquidity correlation will still be relevant, but that's relevant for a lot of assets. It's just that Bitcoin almost like because it lacks earnings season. It can't. There's really not new surprising information that Bitcoin can announce the way that a company can announce. So it's just an asset that kind of trades like a stock in a way, but without some of the other idiosyncrasies of a stock.
It kind of makes sense as to why Bitcoin hasn't participated in the upside of stocks in the past months or year, but it's participated every time in the downside.
Yeah, and I think the core issue fundamentally is that there was not a lot of retail demand this cycle. Almost all the demand was narrow in corporations and institutions. People who have a brokerage account that, the spot Bitcoin ETFs make easier to get access. That's where a lot of that was focused. There's very little people, buying a hardware wallet for the first time, getting Bitcoin is just a very weak cycle in that regard. And so people can point to, this fund blew up and that hurt the price and this happened. But the core issue is just lack of kind of top line demand this cycle. One is that AI drew a lot of attention. I think that's a big factor. I'm not the first person to point that out, obviously. But I think that's a very large factor. Two, because Bitcoin's a global market, there's not been a lot of demand out of China, for example. And I think basically most people at this point know of it. They still mix it with the rest of crypto. Crypto, for the most part, was only in the kind of the negative headlines this past couple of years. Meme coins, grift kind of.
Just start at FTX and go downhill from
Yeah, start from it. And so we haven't really had any sort of like alt season really for the most part this cycle. And the things that have had their little runs are mostly really low quality stuff. And I think that in some ways kind of damages the brand. And I think that it'll take time for Bitcoin to kind of decouple from that. And there's still a roughly $1 trillion altcoin market that I still think is overpriced. And I think we're going to enter a pretty long period of stagnation. in that broad space outside of Bitcoin and stablecoins. And I think that is an anchor on Bitcoin until it eventually decouples. A point that I made in prior cycles is that I think that Bitcoin and broad crypto was eating into silver's monetary use case a little bit. The people that would have otherwise speculated on silver just went elsewhere. Obviously, that came back this cycle. So silver kind of reminded people that it exists and can do pretty wild price swings. So I do think that they compete over similar mindshare. They're hard monies that you can kind of self-custody. They have that kind of aspect to them. And they're bought and sold globally outside of the quote unquote system. So I do think that the strong run in precious metals was a factor, along with AI, prediction markets, other things. There's plenty of things for people to go into. And if they're not using Bitcoin for its kind of key use case, like the fact that they can self-custody a liquid portable asset, then they look around and say, well, there's tons of assets.
By anything,
Bitcoin
to go up.
Yeah, Bitcoin's just one. If someone's only viewing it as a line on a screen. Sometimes just something is just so under-owned, and it's only held by like pretty strong hands, and it starts to set a floor. One of the things I was looking at last year was like Latin American bank stocks, and it's like they're globally, no one wants to touch them, and they had a crazy year out of nowhere in 2025. Who would have guessed, like in a trade war year, that Latin American bank stocks would have done amazing? And it's because there's no single reason. They were just so under-owned that actually when they turned out that their fundamentals were fine, it only takes a little bit of income and capital to make them soar from kind of cheap levels. And I think basically that's the catalyst for Bitcoin next cycle, which is it gets forgotten, left for dead, held by pretty strong hands. And then it, for no particular reason, it just stops going down. And then when it builds a positive price move, then that becomes the narrative. I think so. I mean, all these things, like the frictions of capital getting into Bitcoin when it wants to, are now way lower.
Yeah.
And the key limiter is not, that's kind of the bottleneck that used to exist in prior cycles that has been largely solved now. And instead, the issue is just lack of demand upstream from that. And it's not just, I mean, we think a lot of US markets, but I mean, Bitcoin's a global market, and just globally, there's just not been a ton of retail demand. Now, you can get things like on a country by country basis, when people get bank accounts frozen, they suddenly wake up to, hey, maybe, stable coins and Bitcoin are interesting things. But for a lot of people, if they're in an environment where their payment system works pretty well, there's a lot of other things they can own. I think basically until the price runs, they just kind of ignore it.
How do you frame now the relationship between Bitcoin and stablecoins? Obviously, two sides of a similar coin, right? The two killer use cases of the technology, I would argue. And there's some irony in digital fiat being the killer use case of what was created with Bitcoin. But now that people all over the world have access to both, how do you think we see that future?
I mean, I think stable coins are basically for like your checking account, whereas Bitcoin is more like saving account. That's how I think of them. Basically what stable coins did is they took the concept of an offshore bank account, and instead of making it just for the ultra wealthy, they made it for everyone, anyone who has a smartphone. And they just using technology, they greatly compressed the overhead of effectively having a bank account. So not just access to dollars, but access to payments with those dollars available to everyone. Because they don't pay interest usually, and even if they did, people don't want to hold them for years and years and years at scale, but they use them like a checking account. They use them for working capital. They use them for dry powder. And I think that, I think the market cap's going to double of stable coins, and then, probably keep going from there. And whereas Bitcoin is, it's volatile, but it's the one that's actually decentralized, at least as best as we know how to make something decentralized. And it can't be frozen. It can't be, just unilaterally stopped in the way that a stable coin can. It can't be debased. And so I think that's savings, but it's volatile. So I think they coexist for quite a long time.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.